Representative Hertaus moves House File 3811. To your bill, sir.
Thank you, Mr. Chair. Members, it's just 5 days away from filing income taxes, and it's certainly not controversial to talk about reducing income taxes, I would hope. Anyway, House File 3811 is a proposition of that nature, is to, across the board, reduce individual income tax rates in Minnesota. Many of us remember not too long ago that during the great housing recession and kind of a economic recession, I, being a member of the real estate community and construction trades, had learned back before I was in the legislature that about roughly 20% of the state's revenues were attributable to construction-related activities. At that time, it was necessary, or so it seemed so, that the income tax rates were raised to help shore up the state budget. So what we have today in Minnesota is that Minnesota's top tier at 9.85% is the fourth highest in the nation. And interestingly, our lowest income tax rate is higher than the maximum rate in 23 other individual states. So what the proposal is to reduce each of the brackets by 1%. And currently, what we've seen also is a trajectory of people voting with their feet in Minnesota. And I think it's really incumbent upon us to start looking at this historic moment when the federal government has reformed our federal tax rates for us to consider doing so, and also in Minnesota. In 2014, there were about 2,358,000 filers in Minnesota. That number has continued to drop since then, and we've lost about 13,600 filers net. If you take the median income per household, which is $58,000, or if you take the mean income, which is about $75,000 per household, that means that we've lost more than $1 billion of taxable gross income, which is also revenue producing. A number of us have seen several reports of recent that have been produced by the Center for American Experiment that also indicate in other areas of our economy where when we inject more money into the private sector, in the approximate numbers of $1 billion, the resulting job effect that has, and also income effect. Now, although there is a fiscal note attached with this, and it has a heavy price tag, I do admit that, what it doesn't take into consideration is the additional income that potentially would be realized from injection of this additional money into the private sector. Reflecting again on where we were some 6 or 8 years ago, we have since shored up our budget reserves are at about $1.6 billion. The cash account has $300+ million in it, and at present, our revenues over forecast are more than $600 million, or about $600 million over forecast to date. And I think today, April 10th, we'll probably see another revenue forecast, hopefully for Minnesota, that continues to be revenue over forecast and that we're in good fiscal shape. So I'm suggesting and give you just a little bit more information. As has been discussed before, when we started tax committee this year, we were looking at different ways that we can address the conformity issue. And we know that if we do nothing or simply just conform with the federal government, that it's going to be a net increase to Minnesota taxpayers. That number hasn't been fixed solidly, but I think we've been hearing around $400 to $500 million. So given the fiscal cost of this, if we consider what that number could be offset by the changes in federal law and the things we need to do, part of our discussions in this committee have centered really about wanting to do the greatest maximum effect for the greatest number of taxpayers. And so this is why I started thinking more closely about the individual income tax rates, how we can positively impact every taxpayer in Minnesota by considering reducing the rates. For example, we have 107,000 returns at the fourth tier that are paying $3.213 billion of of state income tax. That's about 25%, Mr. Chair, of all of the revenue that's collected under the income tax scheme. In the third bracket, there's about 284,000 filers. That is $1.257 billion. In the second bracket, which is the 7.05 bracket, there's about $4.632 billion. And in the lowest tax bracket, there's about 25% of our total income tax is collected at the 5.35% bracket. So all of that totals about $12.203 billion, and that is before tax credits and other rebates that are available in our tax code. So the bill suggests that we reduce the tiers by 1% each, and inasmuch as Minnesota likes to be progressive, I would point out that a 1% reduction at the first tier would be the largest reduction in taxes at about 18% of what is currently being paid. At the 7.05%, a 1% reduction would be about 14%. At the third tier, a 1% reduction would be about 12%. And at the fourth tier would be about a 10% reduction in the rates. So some of the disparities we do have, we've got about 14% of all of the filers are paying almost 40% of the state income tax. So I guess I would just point out that this is very scalable, and would hope that we could maybe lay this bill over for inclusion, and as we come to kind of a final plan in terms of how we're going to deal with the conformity issue and how we can mitigate an increase in taxes to Minnesota taxpayers, that we could use this bill and use the rate adjustments in a scalable manner to fit the checkbook that we might recommend. So with that, Mr. Chair, I'd certainly welcome any of the testifiers who want to come down and talk.
Thank you, Representative Hertaus. We'll start out with Ms. Kadoun, Minnesota Chamber of Commerce, and then Ms. Nan Madden will be next. Ms. Madden is here? Okay, good. Please state your name and who you represent for the record, please.
Thank you, Mr. Chair. My name is Beth Kadoun. I represent the Minnesota Chamber of Commerce. I'm also here representing the United for Jobs Coalition, so that was the handout you've referenced. On the back, it lists over 80 local chambers of commerce as well as business associations, and we are advocating to improve our business climate. One of our strong priorities, key priorities, is to enact pro-growth tax reforms. And what we continue to hear, and our focus is really seeing how we can improve our tax rates, both on the individual side and corporate rate. So we are very thankful for Representative Hertaus for bringing this bill forward. We think this is a very important thing for the tax committee to be considering. The success of our state does rely greatly on a strong and growing private sector. We have great businesses and job creators in Minnesota that are important assets to their communities as they contribute greatly as employers in charitable giving, as well as leadership in their local communities. They want to grow and invest in Minnesota, but we continue to hear from them that our Minnesota high tax rates are barriers to their ability to grow and invest in Minnesota. We believe it's extremely important to remove those barriers that negatively impact the ability to grow and invest in Minnesota, that hinder the ability to recruit and retain talent in Minnesota. One thing, as was mentioned, is we do believe federal tax conformity really provides us great opportunity this year to look how do we improve our tax rates. Because as you're considering and putting together your omnibus tax bill, and then looking to adopt these new federal tax definitions or moving Minnesota to a new federal adjusted gross income tax base that will broaden the tax base, that we believe is a great time to follow good tax policy principle, which is if you have a broader tax base, we should look to see how we can lower our tax rates. We believe that will obviously help us have a more competitive tax system and also minimize economic distortions that are caused from high tax rates. We do know that 1% rate reduction, as the revenue estimate shows, might be a bit of a stretch goal, but was as mentioned by Representative Hertaus, you can certainly do things that make it more scalable. You can phase in rate reductions, but what we think is important as you look to adopt these base broadeners is to see how Minnesota can get on a path of a more competitive tax system by lowering all Minnesota tax rates. I've also mentioned in the past in this committee, and you know this, that the individual income tax rate greatly impacts businesses. Over 90% of businesses are pass-through companies. That means they pay their taxes to the individual income tax code. Right now, the last data I had was that 56% of private sector employees are employed by Minnesota pass-through companies. And then the new change that happened at the federal level on the limit of the SALT deduction, the state and local tax deduction, that's no longer, capped at the federal level, that will make Minnesota's high tax rates even more impactful on decision-making for taxpayers. There's been studies that have looked at the impact on state taxes, and recent studies published by the National Bureau of Economic Research and Federal Reserve have found that the individual income tax affects both high-level talent in states, the ability to recruit and retain it, pass-through formation, so entrepreneurship, and employment levels at those firms. Other states are taking action. Most recently, as part of federal conformity bills, Kentucky has just reduced their rate, Georgia just reduced their rate, Idaho, just reduced their rates. In other states, such as our neighbor to the south, Iowa is looking to reduce their corporate and individual income tax rates as well. So we strongly urge you to consider, as you're putting together your omnibus tax bill, to see how we can reduce these tax rates to help Minnesota be more pro-growth, and we think better position ourselves for a strong and growing economy. Thank you.
Thank you, Ms. Kadoun. Questions for Ms. Kadoun with the Chamber and the United for Jobs? Let's go to Ms. Madden then, and then next will be Ms. Larson and Mr. Hickey.
And Mr. Chair, just following up on some of the comments that Ms. Kadoun made, recently I looked at some demographics about the outward migration of Minnesotans, and I presumed incorrectly that it was just simply higher income earners that were leaving Minnesota. What I found in the distribution of our demographic and population is that it's somewhat equal. And if you think about the fact that Minnesota's rate is nearly double the highest rate in 23 other states, that is perhaps one of the causative reasons for many of our young college grads who are migrating and leaving the state, choosing to seek employment and grow their own wealth and prosperity in another area of the country. If you took a high-paying job, one of the STEM graduates, for example, from University of Minnesota, science or engineering technology, you take 5% of that income, that amounts to quite a bit of wealth over a lifetime. So these are really important decisions, as business also has to pay higher wages to recruit talent, as Ms. Kadoun mentioned, because of the net effect after taxes, what that means to the individual if you're going to try and relocate to Minnesota. With that, I'll yield to the next testifier.